Good evening. Thanks for joining us on India Business Hour. I'm Shereen Bhan. The headlines we're tracking for you tonight. Switzerland's largest bank, UBS, agrees to the emergency rescue of its embattled rival Credit Suisse for a cut price of $3 billion. World's leading central banks announced their first coordinated action to boost dollar liquidity since the market turmoil began this month. Global markets inch higher, but investors remain cautious as shares of Credit Suisse and UBS get battered in trade. Bank stocks largely under pressure, even as other sectors take the markets higher. Sharp cuts on Dalal Street despite a late recovery. The Sensex down over 350 points. The Nifty lost 100. All sectoral indices in the red except FMCG and media. Gold prices in India hit a record high as international prices zoom thanks to safe haven bets. Bitcoin hitting the highest level in 9 months. Crude oil prices near 15-month lows, with Brent trading just above the $70 mark.
I think the objective is to keep growing. Look, I think it'll be a mistake to slow down to get the debt levels down. I think these businesses are supposed to be levered.
It's a mistake to stop growing. Don't change anything to please the market, says Rajiv Jain of GQG Partners to the Adani Group after investing nearly $2 billion across group stocks. This on a day when Adani Group puts a 35,000 crore rupee petchem project on hold as it hopes to obtain financial closure in 6 months. It's not just about valuation. Disagreement over deal structure, limited access to data may have been some of the reasons behind Tata Consumer calling off its acquisition talks with Bisleri. Sources say the Tatas will now build distribution assets for their beverage business organically. Anant Goenka resigns as the MD and CEO of tyre major CEAT after a decade-long stint. Will continue as Vice Chairman. Arnab Banerjee, currently Chief Operating Officer, will take charge as the new MD and CEO from the 1st of April. The Supreme Court pulls up the government after it submits the one rank, one pension payment roadmap in a sealed cover. The Chief Justice says sealed covers are fundamentally against the judicial process. The orders the government to clear OROP areas by March 2024. The Tamil Nadu government cuts revenue deficit by 50% in 2 years. The finance minister announces a 50% hike in property rates in the state budget, also clears the allocation for 2 metro rail projects, industrial parks and social sector schemes. Chinese President Xi Jinping arrives in Moscow for a state visit, says Russia and China are good neighbors and reliable partners. Beijing says that China will play a constructive role in peace talks, pushes its ceasefire plan, which has already been rejected by the West and NATO. Well, the top story this evening, the turmoil in global banking stocks is keeping the markets nervous across the world. But let me bring you up to speed with all the furious developments that have taken place. Switzerland's largest bank, UBS, has agreed to buy its embattled rival Credit Suisse in a cut-price deal worth just over $3 billion. Now, the UBS chairman has called the deal, and I quote, an emergency rescue, end of quote, given the size of Credit Suisse. For context, Credit Suisse has a balance sheet of more than $1 trillion and is double the size of Lehman Brothers when Lehman collapsed in 2008. Shares of Credit Suisse and UBS hammered in trade. Investors are nervous about the $17 billion bond write-down, and those holding 81 bonds have been simply wiped out. The Saudi National Bank has also suffered significant losses of more than $1 billion. The Saudis were the largest shareholders in Credit Suisse, having invested $1.5 billion for a 10% stake. 80% of their investment value now wiped out. Amidst the turmoil, the world's leading central banks have announced their first coordinated action. The US Federal Reserve and the ECB, along with central banks from UK, Japan, Canada and Switzerland, have moved to improve global access to dollar liquidity. Central banks had announced similar action during the 2008 financial crisis and at the start of the COVID pandemic. The US Fed and the Bank of England will announce their rate decisions this week. The street is veering towards a 25 basis point or even a pause in light of all the recent developments that are roiling the markets.
The historic deal came late Sunday after a weekend of negotiations brokered by the Swiss regulators to help safeguard the country's banking system. As part of the all-share deal, the Swiss National Bank has provided 100 billion francs of liquidity assurances to UBS, in addition to the Swiss government granting a 9 billion Swiss franc guarantee for potential loan losses.
The accelerating loss of confidence and the escalation over the last few days have made it clear that Credit Suisse can no longer exist in its current form. We are happy to have found a solution, which I'm convinced will bring lasting stability and security for clients, staff, financial markets, and to Switzerland.
UBS intends to downsize Credit Suisse's investment banking business and align it with our conservative risk culture. It is intended that the combined investment banking businesses will over time account for no more than 25% of the group's risk-weighted assets.
A series of setbacks and failures at Credit Suisse saw its shares sink more than 70% over the past year, putting the troubled lender's market cap at just $8 billion as at the close on Friday. That figure pales into comparison to UBS's roughly $57 billion market cap. Now, Switzerland's finance minister insisted the government's brokered deal is not a bailout, but a commercial solution and one necessary to stop contagion risk to the broader financial market.
The bankruptcy of Credit Suisse would have had a collateral damage, a huge collateral damage on the Swiss financial market, also risk of contagion for UBS and other banks, and also internationally.
We should not forget that we have a very fragile market environment at this point. So going into resolution would be anything else but helpful under those circumstances. So this is a private sector solution with limited state intervention.
The other interesting aspect to this over the weekend was the number of reports that UBS was only prepared to offer about $1 billion for this business at this stage. One imagines that the authorities and Credit Suisse made a hard play to increase the price tag, but that increase would have come at the cost of those additional support lines that we know about. So I think, as you've made clear in just running through the history of this organization, ultimately back to 2008, so many of the things that have led us to where we are now are really problems with the culture in the bank, problems with the management of the bank, and a successive series of bad decisions that were taken, and capital was ultimately destroyed.
Well, the emergency rescue there of Credit Suisse. But here's the action as far as the markets are concerned. And let's start with the Lal Street. The markets ending in the red despite an intraday recovery coming off their lows. The Nifty and the Sensex closed over 0.5% lower. Financials led the intraday recovery after a breach of October 2022 lows by both the Nifty and the Sensex, except for FMCG and media, all sectoral indices closing lower today. BSE companies are raising a market cap of 1.88 lakh crore rupees this afternoon. As stock markets across the world are nervous, investors flock to safe haven bets like gold. Prices of the yellow metal have hit an all-time high here in India, Australia and UK. Fears of a global banking crisis spurring heavy flows into gold. Prices in India touching an all-time high of close to 60,000 rupees per 10 grams. International gold prices at a 52-week high. In the commodity market, oil prices falling to their lowest level in 15 months. This concerns on the back of the global banking crisis could perhaps lead to a global recession. That's not all. A potential rate hike by the US Fed continues to weigh on sentiment. So Brent and NYMEX fell by over $2 a barrel. That's the oil market for you. And despite the fall in crude oil prices, the central government has not yet made any revisions to the windfall tax. This revision is usually expected around the 15th of March. It is a fortnightly review as per the government's mechanism. The earlier revision had come in on the 3rd of March, where the government had raised the windfall tax on crude petroleum, whereas ATF and diesel were cut to nil. Given the current slide in crude oil prices, industry is expecting a cut in the windfall tax, but there is no notification from the government as of today. Speaking of taxes, the chairman of the Central Board of Indirect Taxes and Customs, the CBIC, has written to his officials seeking urgent attention on revenue mobilization. In a letter, Vivek Johri told employees, and I quote, "As we move towards the last few weeks of the financial year, we must focus more closely on our efforts to maximize revenue collections through every possible legitimate means." End of quote. Here's a CNBC-TV18 exclusive. The Adani Group stocks came under pressure in trade. 9 of the 10 group companies ending in the red today. The group has also put on hold a 35,000 crore rupee petchem project as it hopes to obtain financial closure in 6 months. Rajiv Jain of GQG Partners, who invested nearly $2 billion into the Adani Group stocks, does not want the conglomerate to stop growing. Speaking exclusively to us, Jain said it would be a mistake if the Adani Group slows down on growth, and adding that he doesn't want them to change strategy to please the market. Take a look.
So our view is that they need to keep pushing for growth while managing the debt level, which I think they've already done that. I mean, they announced some of the shelving of the project, so on and so forth. So I think it'll be a little more manageable from the debt perspective, although we are not concerned as at the current point from a debt side. But I think the objective is to keep growing. Look, I think it'll be a mistake to slow down to get the debt levels down. I think these businesses are supposed to be levered. That's the model. So debt has to be in a sort of in a measured way. However, our view is that don't change anything to please the markets. We feel that these are still unique assets. I keep reminding everybody that it is not a service-oriented business where I tell you something. There's a regulator in between. There's somebody's getting power, which is decided by a regulator. So we actually do not feel that as a very risky bet. And as I said, our typical style is we have a position, we actually keep working on, and then add.
Well, that is Rajiv Jain of GQG Partners, and you can catch that interview with him at 9:30 p.m. right here on CNBC-TV18. HDFC Bank may get some relief from the Reserve Bank of India on its priority sector lending. We learned from banking sources that HDFC Bank may be granted more time to reach 40% priority sector lending. Sources also suggest that concessions for the bank on statutory liquidity ratio and cash reserve ratio, though, look tough. Anand Goenka has resigned as the MD and CEO of tyre major CEAT, this after being in the helm for a decade. He will continue as vice chairman. Arnab Banerjee, currently the chief operating officer, will take charge as the new MD and CEO on the 1st of April. An alumnus of the Harvard Business School, IIM Kolkata and IIT Kharagpur, Banerjee joined CEAT in 2005 as vice president sales and marketing. So another change at the top across corporate India. Lakshman Narasimhan has officially assumed the position of CEO of Starbucks, taking over from Howard Schultz nearly 2 weeks earlier than planned. Prior to his appointment, Narasimhan served as the chief executive of Reckitt Benckiser. He was named the incoming CEO of Starbucks in September of last year. And days after Tata-Bisleri deal was called off, we learned that it was not just valuation but disagreement over the deal structure. Limited access to data could have potentially been some of the other reasons behind talks failing. Mangalam joins us now with more. Mangalam.
Well, that's correct. You know, we were just looking at Tata Consumer and Bisleri's announcement on Friday itself, the fact that the negotiations have ended. So at the same time, I was trying to find out some of the reasons. While valuation would have seemed an obvious parameter, but we understand from some of the sources in the company and ones who were working on the deal that there was a lot of delay in these negotiations. They were going on for over 8 months, and as a result of which there was some disagreement over the deal structure as well. So those were some of the factors. You know, a lot of the data points as well were the lack of access to that were some of the factors that would have led to the deal actually falling through. Valuations, while they were on the higher side, but definitely not the main concern. And remember, Tata Consumer's beverage portfolio anyway over the last few years has been growing twice the Bisleri's growth rate. In fact, Narishco reported 44% growth CAGR between FY20 and FY23, whereas Bisleri grew about 20% between FY20 and FY15 itself. The other parts of the Tata Consumer business, which is Tata Copper Plus, which is their value-added water, was growing at a CAGR of over 100%. Their premium segment, which is actually, as a market growing 2 times the normal segment, has a market share lead of 3:1 as against Bisleri's Vedika. So Bisleri would have, Tata Consumer would have grown to Bisleri's size in a few years organically anyway. But what the deal would have given them is immediate access to the market and infrastructure. Bisleri had about 120 operational plants, a distribution network of 6,000 plus touch points, at the same time 7,500 trucks too. But now Tata's will go ahead and build their business organically for the beverage business. So that's what we've found out from our sources.
Mangalam, many thanks. Now, the Supreme Court has pulled up the government after it submitted the one rank, one pension payment roadmap in a sealed cover. Justice G.Y. Chandrachud said that sealed covers are fundamentally against the judicial process and need to be ended. Ashmit joins us now with more on the observations made in the Orope case and the comments that came in from the Supreme Court on the sealed cover jurisprudence. Ashmit.
Well, the Chief Justice of India, Justice D.Y. Chandrachud, making his position exceptionally clear that he's personally averse to submissions being filed by the centre, by the government, in a sealed cover. Now, this is something that he's taken exception to in the past and made his view clear today as well. And now all of this case, today's hearing was essentially in the one rank, One pension or the OROP case that was pending before the apex court. The hearing, the subject matter essentially was regarding compliance of a previous Supreme Court order which had directed for these pension dues to be cleared by March 15th. That did not happen, and therefore the centre, represented by the Attorney General, sought to clarify its position, but in a sealed envelope only for the judges and not for the other parties. Now that is something that the Chief Justice did not like, made his views clear. He pointed out that this is fundamentally against the rules of justice, that this proceedings, this public proceeding, there can be no secrecy in that, there needs to be full transparency, and further going on to say that he's wary of allowing these sealed covers to ensure that the high courts don't start beginning this practice of accepting submissions in a sealed envelope. Now this is the view that the apex court has given, has said that all the submissions that the centre has to give can be made in public, can be passed across the bar, and need not be in a cover. What's interesting is that very recently, even in the Adani Hindenburg case, at the time the centre had sought to make its submissions in a sealed cover, and that too had been rejected by the apex court. So the CJI taking a firm view, no room for secrecy, no sealed cover, transparency is the way to go.
The practice of a sealed cover is the antithesis of having an open court. There are exceptions to this in the sense that Section 123 and Section 124 of the Evidence Act provides for the state, that is the government, producing documents only for the consideration of the court. These are called privileged documents. Now, such documents have to be produced, they can be produced in a sealed cover, along with an affidavit of the head of the department concerned. So if it's from the Government of India, for example, a particular ministry, then the secretary of that ministry has to give an affidavit giving the reasons why the documents are privileged and why they should not be disclosed to the public. The court will then decide whether in fact the documents are privileged or not, and if they are not privileged, then the court will unseal the documents and make it available to the public for scrutiny.
And staying with the Supreme Court, it has directed the market regulator SEBI to refund 300 crores to the NSE, which the exchange had deposited under disgorgement orders. The apex court also refused to stay the Securities Appellate Tribunal order, which struck down SEBI's disgorgement order. More news from the court. The Supreme Court has refused to stay a National Company Law Appellate Tribunal order allowing debt-laden Reliance Capital's lenders to conduct a second round of auction. This comes as a setback for Torrent, which emerged as the highest bidder in the previous auction. Torrent Group had moved the Supreme Court, claiming that another round of auctions would cause irreversible harm. And the Supreme Court has dismissed a plea which sought mandatory registration of live-in relationships. Calling it a hair-brained plea, the court wondered if the petitioner was trying to prevent live-in relationships under the guise of fostering their security by seeking mandatory registration. Well, we would head into a short break, but up next, the Tamil Nadu government cuts revenue deficit by 50% in 2 years. Finance Minister Thiagarajan announces a 50% hike in property rates in the state budget. More details when we return. A quick check of the international headlines. China's President Xi Jinping has arrived in Moscow for a state visit. He's likely to tout China's proposed peace plan to end the war in Ukraine. Beijing said that China will play a constructive role in peace talks, pushing its ceasefire plan, which has already been rejected by the West and NATO. Russian President Putin visited Mariupol over the weekend. This was his first visit since the Ukrainian city was captured by Russian forces last year. The Kremlin said that Putin's decision to visit Mariupol was a spontaneous one. Russian officials released videos of the visit where President Putin can be seen touring the city. Former US President Donald Trump claimed over the weekend that he may be arrested tomorrow on charges of sending hush money to a porn star in 2016. The decision on whether to file charges rests with the New York City District Attorney. If the charges are filed, he will be the first former president in the history of America to face criminal charges. A long pending hike in real estate guidelines values and allocation towards metro rail projects and industrial parks, and renewed emphasis on social spending. Some of the key takeaways from the Tamil Nadu state budget tabled today. But in his third budget since the DMK assumed power, Finance Minister P. Thiagarajan also had some good news for Tamil Nadu's finances. Jude Sanet joins us now with more. Jude, Good news coming in there as far as the revenue deficit is concerned?
Yes, and that's largely because both revenue and fiscal deficits have seen some widening in the years gone by. However, in good news for the state's finances, Tamil Nadu Finance Minister P. Thiagarajan announced that revenue deficit had halved in the time that the DMK had taken over in 2021. It was 62,000 crore when they assumed power, but it is merely 30,000 crore today as per revised estimates in FY23. But that was not all, because the DMK government also went back to its favorite approach to finances, and that is social spending, because the Tamil Nadu budget tabled on the floor of the assembly saw a whopping 7,000 crore rupees allocated for a poll promise the DMK made a couple of years ago, and that is assured income of 1,000 rupees per month to women head of households. And also 500 crore rupees were allocated for the Chief Minister's pet project, that is the free breakfast scheme, which will impact more than 30,122 schools that see children now have free breakfast as opposed to midday meals itself. Now, interestingly enough, big allocations were made for the industry too. In fact, 8,000 crore and 8,500 crore and 9,000 crore was set aside for two metro rail projects in Coimbatore and Madurai, whereas industrial parks in districts like Kalakurchi, Virudhunagar, Coimbatore, and a couple of more saw allocations of between 410 and 880 crore rupees, including a textile park in Salem itself. So key announcements really being the highlight of the Tamil Nadu state budget, even as Finance Minister P. Thiagarajan presented just his third budget on the floor of the Assembly today.
Jude, many thanks for joining us. Well, aviation consultancy firm CAPA expects airlines to post $1.6 to $1.8 billion worth of losses in the next fiscal. This even as domestic and international traffic is expected to grow by more than 20% year on year. Aviation Minister Scindia, Air India's CEO Campbell Wilson, along with other CEOs, were at the Aviation Summit. Madhya Mujawar and Danish Anand bring us the action.
The who's who of Indian aviation have gathered here in Delhi for CAPA India's Aviation Summit. This is the first time after 2019 that CAPA has organized this summit.
I think our largest lessor was Carlyle, and with them we have converted their debt, almost their entire debt, into equity, and so that's positive, and we will look to do the same thing with our other lessors. And that will significantly strengthen the balance sheet.
And if we cast our eyes forward maybe 12 to 15 months, we will have the first of our 470 new aircraft already in service. We will, in the next couple of months, have restored all of our grounded wide bodies to service. We will be starting to see the retrofitted wide bodies enter service. So I think in the context of global aviation, the pace of this transformation will be, if not unprecedented, will be close to it.
I think the most efficient operating structure is to have one full-service airline and one low-cost airline, and I think that's what is the construct we are working towards. But the good work that's being done by Vistara and everything that we've built, I think everyone, including the shareholders and the people at Air India, value what we brought to the table. So we will want to make sure that that continues, and the transition, if at all it happens, is done to a better product, if not the same.
The Indian aviation sector is all set to reach new skies as more and more airlines are slated to place more and more new airplane orders. Akasa Air, which placed an order of 72 aircraft in the beginning, is all set to place another big order of more narrow-body aircraft by the end of this year, as the airline feels that narrow-body is an important element for the airline strategy and a good future ahead.
I think outlook is very robust over the next several years. I think, we are looking at something like a 7% to 10% annual growth over the next 5 to 7 years.
Well, that's all the aviation action. And with that, it is time for us to wrap up this edition of India Business Hour. Thanks very much for watching. Do stay tuned. The news continues here on CNBC-TV18.
कैसे करते हैं ट्रेड? ट्राई 5 पैसा।